We've got Ridwaan Moolla of Think Markets who joins us now to unpack those numbers that were just on your screen. Ridwaan, we were just speaking offline that the local bourse is at record highs. What are some of the big catalysts that have contributed to this? I know one of them would obviously be the conflict that we're seeing between Russia and the Ukraine.
So firstly, big hands up, obviously, for the Wall Share Index. 77,110 is what it closed at, so that's a new record. But the main reason for that is, yes, what is happening in Ukraine and Russia. The resource sector, is the one that's obviously flying. It's the one that's going to benefit from this entire conflict. And like you just said, now we've got petrol prices increasing, and that's mostly because of where oil is. We're now paying Brent at over $105 at the moment for Brent. You've got that. You've got palladium as well, which has skyrocketed today, just over 6%. It's not at record highs yet, but it's very, very good. It's just our resource sector is just going literally crazy, and that's obviously because of this conflict. There's Ukraine obviously not being able to produce all the things that we can. And obviously now that demand is coming here to South Africa, so we do benefit from that, if one can say that. But that's ultimately why you're also seeing all these resources, companies and that doing so well.
No, absolutely. But we are seeing that emerging market currencies like our own not faring too well against major global currencies. Your thoughts on those movements?
So, your USD and the likes, obviously all the emerging currencies and the likes will take a bit of a knock right now. People are looking for more safe havens. And obviously there's a big demand right now coming from Russia with the ruby taking a knock, people wanting more dollars. So you're seeing more strengthening of those currencies more than, I would say, the weakening of the rand. But emerging markets will take a bit of a knock, obviously, as people rather go into the safe havens, even in the currency sector as well.
Let's talk about some company news that came out today. PSG announcing that it will be delisting from the JSE. One of the reasons that were actually cited by the company is that there's too much red tape on the local bourse. Your thoughts on that?
To be very honest, the JSE, we've seen actually in the last few years, there's been more companies delisting than actual companies listing on the JSE. So it does speak to quite a lot of the red tape and the likes, obviously, that is happening and why companies are delisting. But the most important thing is for investors, obviously, like in PSG, one of the benefits that they get out of the delisting, as you saw today, the share price is up over 18%, but there'll obviously be a premium that PSG will have to pay to shareholders to actually buy the shares back and then be able to delist. But yes, there has been a lot of discussions. We know, as brokers, we know there's a lot of companies that are discussing with the JSE, all the red tape and the likes. But we also got to take into account that some of that red tape is there to protect investors, to protect especially those shareholders when it comes to investing in these companies in the JSE. So it's a bit of a catch-22 for everybody. But right now, look, PSG's made that decision. But I also think it's also more because of them trying to get better value out of the PSG group. The share price, obviously, they've said it quite a few times, it's trading at a very discounted rate. It's not taking into account all its holdings. So that's also one of the reasons as well. It's not just the JSE's red tape.
No, absolutely. We've run out of time, Ridwaan, but I have to ask you, they did mention that it would be 23 Rand per share in cash that shareholders would be getting because they want to kind of buy everyone out and keep it as an intimate group of managers within the business. What do you think of that price?
Well, if you look at the price, obviously every single investor over the last 5 years is going to be making quite a nice profit on that if they do sell, obviously, the shares and they are able to buy all the shares back at that price. As an investor, it's a good thing. But the most important thing I always say to people is when things like this do happen is don't take the money out of the stock market. You then need to look at how you're going to reinvest it and where's the next company that you want to reinvest it in.
Absolutely. Ridwaan Moolla of Think Markets joining me to wrap up the Markets Day. And that's